When you think of two popular Vanguard funds, the VUG and the VGT might come to mind, but with a very tech heavy focus, which one is really the best ETF to buy? That's what we're going to be breaking down in this video. Now, I did make a video on the VUG and a lot of people said there's no reason to buy the VUG because the VGT is out there. Now, we know the VUG is the Vanguard Growth ETF, and then the VGT is Vanguard Information Technology ETF. So there is a clear difference where one is kind of focused in tech heavy and one is exclusively in the technology sector. I'm going to go through this, break them both down, and then show you exactly why I am investing in one versus the other. Now, when you think of long-term, it is really the track record of how these has performed. Both of them, they are pretty much neck and neck. Now, the VGT is up 48%, while the VUG is up 47.8%. So they are very, very close. Again, when you think of tech, and then when you look at exclusive tech within this funds, but when you kind of break it out a little bit further scale. So when you look at this 5-year scale, the VGT gained 166%, which is kind of crazy to think that we are up 166% in just 5 years, while the VUG was at 121. So obviously, 5-year scale, there is a very clear winner when you're looking at the tech exclusive. However, it's hard to really compare and complain about the performance of either fund because they've all grown and both have grown over 100%. Now, the VUG has an expense ratio of a 0.04, while the VGT is a 0.10. So a little bit over double what the expense ratio is of that VUG. But it really breaks it down. And this is the reason why I invest in one versus the other, because with both of the funds, we have Microsoft, we have Apple. However, it is the position of these funds that I really want to focus on in this video. So when you look at the VUG, now, of course, this is the Vanguard Growth Fund. Two tech giants, Microsoft and Apple, make up a big chunk of the holding. Microsoft actually holds 13.2. Apple holds 12.12. So more than a quarter of VUG's total assets are in those two companies and those two companies alone. Now, that is really something to remember because when we look at the VGT, this is where really the difference makes and really shines out. Honestly, the VGT is very lopsided towards tech conglomerates, with 20% over 20.4 or 20.5 to be exactly in Microsoft, and 20.2 is in Apple. That is right. Between these two stocks, it makes up over 40% of the VGT's total holdings, which is huge. So when you think, again, that VUG fund, around 25% is between Microsoft and Apple. When you look at the VGT between Microsoft and Apple, you're looking north of 40%. Now, this, of course, really runs the diversification issues. Now, of course, the VUG has all of the Magnificent Seven in there within the top 10 holdings. However, the VGT deviates from this. NVIDIA is the only other Magnificent Seven stock that holds in this fund. Now, again, when you think of the VGT, it is tech and it is tech exclusive. Now, of course, if we see a minimal growth or not as much growth out of Microsoft, if we see the exact same thing for Apple, this is going to underperform. Now, that is why over the past year, the VUG has been catching up to the VGT. So even looking over the past 6 months, the VUG has been 10.5%, where the VGT has been 8.6%. So, I mean, they're almost going neck and neck, but the VUG has seen almost a 2% increase return. That is because of Apple. So this trend could not continue or may not continue. It really depends on your outlook. And it is because of Apple, because they're holding such a big majority in Apple. Although the shares are up 320% in the past 5 years, they're only up 14% over the past year, and Apple is currently down 4% over the last 6 months. Now remember, that VGT has the biggest majority between Microsoft and Apple, meaning that if Apple is underperforming, the whole entire ETF is going to underperform, which is kind of crazy. Now, this really hinges on the Vision Pro becoming the next big selling product for Apple. If we don't see this, it's not going to turn around Apple. Yes, they have great products, they have a great following, but overall, it seems like it's almost getting a little bit complacent. That is why we're even seeing them down 4% over the past 6 months. There's a very limited upside other than the Apple Vision Pro for the products and services that they're coming up with. Now, this makes a big case for why people are buying and building up that VUG, because it looks more incisive in incentivizing towards the portfolio composition. While Apple's growth slow, investors paid more attention to other stocks. We've seen a lot of money moving out of Apple. While both have funds in Nvidia, third largest holding is out there for both of them. That is where they kind of deviate. Now, when you look at the VUG, it has Tesla in there, which we know Tesla is kind of underperforming right now, but it also in the VGT has Cisco, which Cisco is really doing, hasn't budged in a multitude of years. So there are a couple holdings that they do. Now, Cisco stock is down 6% over the past 5 years. Dividends kind of keeping it afloat. But overall, when you look at the 5-year return, the VGT is a better 5-year return. But going forward, the VUG is poised for a much better next 5 years, which is the reason why I did want to really break this down. So what do the analysts say? So when you look at the financial analytics of the VUG, VUG is still rated as a strong buy, which is crazy. So 172 buys of analysts that are reporting this, 35 hold, and only one sell rating was assigned within the past 3 months. The VUG has an average stock price or a target stock price of $450, which implies a 10 to 12% upside for the VUG within the next 12 months. So that's a pretty big growth rate when you look at the VUG. In comparison to the VGT, according to analysts, we have 231 and it falls into a moderate buy. 76 holds and then 7 sells are assigned to this within the last 3 months. Upside of this, they are looking at roughly 11%. Now, of course, the VUG, they are saying, again, is going to have a lot more growth, where the VGT could kind of see a lot of the churning of the same tech stocks. If we don't see the explosive AI that we've kind of seen in the past, if it's starting to simmer down and kind of level out with the growth of Nvidia and a couple of these other very large companies, we might not see the growth as much. So comparing stocks and really comparing both of these ETFs, there's no correct answer. Both of the stocks or both of the ETFs do incredibly well, but with the case for these funds, the VGT has a better 5-year return, meaning that it is more reliant on Apple, but the VUG still has a very significant exposure to Apple, which is preparing for a slowdown in the stock itself. So if and really it hinges on this Apple Vision Pro. If it turns out to be a winner, the VGT will outperform the VUG, but that is not a guarantee because you are relying on one and only one company. Now, of course, with this, both of the funds do rely heavily on Microsoft and Apple, but VUG, when you start looking at the top 10 holdings, have a much solid, more well-poised performance that we're going to see in the next 5 years. And again, this is using the analyst data and where they're kind of expecting both of these ETFs to grow. So with the growth ETFs, which one is really the best? Me personally, if you've seen my portfolio, I hold the VUG. I do not hold the VGT. And the reason being, when it comes to being tech heavy, if the tech sector takes a dive or stagnation or even goes down a little bit, the VGT being so focused in that tech heavy sector, you're going to see a significant decline in that VGT, where the VUG with those top 10 holdings could really stay afloat and outperform the VGT. So overall, guys, my choice for this winner is the VUG. That is the one, again, I personally hold 25% of my portfolio in. So let me know which one you choose. Are you going VUG? Are you doing VGT? Let me know in the comments what you guys think, and I'll catch you in the next video.